Ethereum's explosive 46% rally over the past month, culminating in a surge above $3,600 last week, has reignited hopes that ETH may be on the brink of a monumental final leg of a bull cycle, potentially even reaching
$10,000. Elliott.
Wave framework laid out by Dutch analyst Gert Van Lagen proves accurate. Elliott Wave Theory posits that market psychology unfolds in repetitive 5-wave cycles, each wave composed of smaller ABC structures reflecting collective investor sentiment oscillating between optimism and retracement. Van Lagen's analysis of ETH's biweekly chart suggests that the cryptocurrency is nearing the ETH completion of its 5th and final impulse wave, an expanding diagonal pattern that began when Wave 1 launched the uptrend in 2022, followed by a corrective Wave 2 that retraced a significant portion of ETH's early gains, ushering in Wave 3's breakout leg that blasted prices to new highs. Wave 4 then settled into a broad, sideways consolidation, absorbing profit-taking and building base support, before the current Wave 5 emerged, typically viewed as the last hurrah of an extended bull run. According to Van Lagen, subwave 5A of this final cycle has just wrapped up with the recent push past the upper boundary of the Wave 3 for trading range. That extension above $3,400 marks the completion of the initial thrust upward, after which a brief corrective subwave 5B is expected to retest the breakout zone and shake out weak hands and ABC pullback that could pull prices back toward $3,200 or slightly lower, if history rhymes with past Elliott structures. This short-term correction should be followed by a powerful 5C thrust, the final upward move of the pattern, which Elliott practitioners project could carry Ethereum all the way to $10,000. That target derives from Fibonacci extensions applied to the length of Wave 1 and Wave 3, confluences that often materialize in the decisive 5th leg of historic bull cycles. Such a scenario offers a tantalizing opportunity, a more than 2.5-fold increase from current levels, representing a generational windfall for long-term holders and speculative traders alike. The thesis gains further traction from fundamental catalysts: Ethereum's steady progression toward PLAYBOOK implementation and Layer 2 scaling solutions promises materially lower fees and higher throughput. Growing institutional adoption, evidenced by mounting flows into ETH-backed ETFs and staking products, underpins demand. And the continued evolution of decentralized finance NFTs and on-chain credit markets cements ETH's status as the preeminent smart contract platform. Together, these factors could fuel the sustained demand necessary to power a 5C surge unbound by prior resistance levels. Yet even the most compelling Elliott wave counts carry inherent subjectivity, and the prospect of a $10,000 ETH ride hinges on a range of critical assumptions. First, wave counts can be retroactively adjusted if price action deviates from the expected structure, meaning today's diagonal could morph into an alternate pattern such as an ending flat or zigzag nullifying the 1OK projection. Furthermore, daily trading volume has fallen off roughly 12% despite the latest rally, suggesting waning momentum. In classic Elliott terms, lack of volume in Wave 5 subwave 5A could presage a truncated 5th wave, where the final leg fails to reach its Fibonacci ambition and ends prematurely, capping ETH below $4,500 or even $4,000 once Wave 5C fizzles. Macro headwinds also temper the outlook. A surprise, hawkish turn by the Federal Reserve or worse than expected U.S. inflation data could trigger broader risk offlows, dragging ETH and all risk assets lower. Even with favorable scaling upgrades, Ethereum's network congestion and gas fiber dynamics remain variable. If on-chain activity stalls or yields on staking products underdeliver, the fundamental demand thesis weakens. Additionally, competition from alternative Layer 1 South and Layer 2 South each, vying for DeFi TVL and developer mindshare, could dilute ETH's growth narrative, constraining its ability to command valuations consistent with a 10K target. Regulatory shocks such as sudden restrictions on staking or DeFi protocols might also undermine confidence, leading to a protracted consolidation or even a corrective bear market phase before any speculative altcoin season can fully unfold. Despite these risks, the current Elliott configuration offers a coherent roadmap for traders and investors. For those inclined to follow wave theory, a measured approach could involve scaling into positions near the anticipated 5B trough, perhaps around $3,200 or a marked Fibonacci retracement zone, then riding the potential 5C impulse toward progressively higher price objectives with protective stops below the wave for structure to mitigate down-tail risk. More conservative participants might prefer to wait for confirmation of the 5C breakout, namely a sustained close above the early January swing high of around $4,000 on strong volume before engaging fresh capital, thereby reducing exposure to a failed diagonal scenario. On the other hand, fundamental investors focus less on wave counts and more on macro and network metrics could anchor their thesis on institutional inflows and staking yield spreads. Should these flows remain robust and network upgrades materially improve Ethereum's capacity and user experience, they may view a $10,000 price point as a logical reflection of ETHs, maturing monetary policy where fee burns eclipsing issuance. Turn Ethereum effectively deflationary. Staking yields offer attractive risk-adjusted returns compared to traditional fixed income. Yet prudent allocators will keep an eye on yield curve shifts, regulatory calendars, and on-chain security developments, particularly as MEV and Sandwich attacks threaten user confidence and network fairness in the broader crypto ecosystem. An ETH run to $10,000 would almost inevitably spark a renewed altcoin spectacle, with many lesser tokens posting even more dramatic percentage gains relative to their ETH pairings. Such a dynamic aligns with past cycles, where Ethereum's fifth wave was mirrored by a hyperextension in smaller cap projects. However, history also warns that speculative excesses in sub-$1 coins can lead to brutal drawdowns once the final blow-off top is reached, underscoring that any race to $10,000 must be navigated with robust risk management, including profit-taking strategies, dynamic rebalancing, and capital preservation hedges. Ultimately, the Elliott Wave forecast for a $10,000 ETH rests on a delicate confluence of technical precision, network evolution, and macro stability, while the expanding diagonal pattern and Fibonacci targets paint an enticing bull run blueprint. Investors must remain vigilant to the myriad factors that can invalidate wave counts or sap market momentum. Only by balancing bullish ambition with clear-eyed awareness of risks, structural, regulatory, and economic can one meaningfully participate in Ethereum's next phase while safeguarding capital from the wild swings that typify crypto's grand cycles. As Ethereum continues its journey through Wave 5, the key questions will be, can it sustain the energy to break past resistance levels? Will corrections, both technical and fundamental, merely serve as healthy retracements, or will they precipitate a deeper trend reversal? The coming weeks and months marked by Fed announcements, network upgrades, and shifting on-chain flows will ultimately decide whether Ethereum's Elliott Wave prognosis of $10,000 becomes a triumphant finale or a cautionary footnote in its storied ascent.